The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, we're back, folks, and we're from third show. We have a special guest on at the half hour. We're going to have Ed Wilson on. He's a member of the Market Technicians Association out of Seattle, of course, New York, but he's written several books about the life and practices of a speculator from the 1940s, 50s, 60s, 70s. Lindsay, he's the who has 3 peaks in a house. Ed has information for us coming up at the half hour. So we'll let him talk about it. We'll talk about the market a little bit later, but now I wanted to go to look at one particular market. It looks very, very interesting. They wrote an obituary about it this week in the New York Times and the Wall Street Journal, and that is the gold. It is very, very interesting here, folks. We've made the 61% retracement at $1,160 per ounce that we hit on Friday. That was exact from the low from October of 2009. But what's more important is the fact that after gold broke above 1,000 for the first time, 2008, what happened was it sold off immediately. After it hit 1085, it backed off all the way down. It dropped 38% to 684. Had a 38% drop, and from there, from 684, it proceeded to go up 2.618 times to the $1,924 per ounce level. Now, what we've done in gold now is we've made the 61% retracement off of that number. Also happens to be 382 off the low we made back in 2003 at $256 per ounce. So we've made a 39% correction from the high at $924 per ounce as of Friday's close. So the risk here in being long gold is very, very small, in my opinion. We have the same situation in silver that I'll post just a little bit later to show you the large ABCD patterns that completed at 1575. We hit a low of 1565 on Friday, but boy, it was not there for more than a few seconds. The trading between 1575 and 1565 was pretty much non-existent. Virtually nothing there. Unfortunately, we don't have anything to help us with open interest or volume because it stayed pretty much the same all during that time. So it's pretty easy to say that this market is still very, very bearish, but there's very few people that want to own gold and silver here at this point, and everybody wants to own, risk assets like bonds and stocks and stuff, which I guess is the thing to do. Japan has, as you all know, have put the equivalent of someone said to put I think it was Art Cashin from the New York Stock Exchange said it was equivalent of us buying $3 trillion in bonds. That's a lot. So we'll see if that's going to keep these markets up. We've got some very, very serious patterns that are usually bearish, but who knows? The Bradley model is definitely inverted on October 5th. We talked about that last week. That doesn't look like it wants to top until November 22nd and 23rd. We have some things that say that it could be a little bit sooner than that, but it's still rather early. But it looks very, very strong, as you can see with this moonshot that we've had since October, the 15th. It's just had a great deal of power. It's sort of the last trade from Boot Hill, in my opinion, is please let me in. I've missed the whole thing. I want to get involved with this, and this could be the right thing to do. I don't know. I don't believe that it is, but we'll wait and see if it's going to continue to rally into this level. We don't have very, very negative patterns in things like the IBB, the biotech index that I posted into Tiger TV as my first chart this morning. I also posted in the NASDAQ is also making that same pattern, that expanding triangle, also known as the jaws of the T6 pattern from Gartley's book. We have the same pattern happening in the Dow Jones Transportations, and we have the same pattern also in the Dow Jones Utilities, along with a few other indices that are doing pretty same thing. The IMM has broken out its downtrend line and that big ABCD that formed down on October the 15th. That was really the tip-off and where the market was going to bottom, because with stocks getting hammered that day. The IWM, the small caps, was active on the day when the Dow was over 200 points, which that only happens once or twice a year at most, and usually not more than 3 or 4 times in a decade. So we have very interesting markets here. The good part is this volatility that we're having is really in my opinion, I think we've got just to scratch the surface of it. We got the VIX index is still down at that same area where we were before, down around that 12, 13, 14 level, just below the 786 retracement of that move, and we'll see if it's going to be very much to look at down the road here. Now I wanted to show you where we are in the foreign markets, because this is a very long-term chart that I'm going to show you now. It's from our good friend in Athens, Mr. CV, and he has been kind enough to send this really long-term chart on the yen versus the dollar, and we're up at this 14 level where we have the 618 from 2007, the from 2002, and the 50% from 2099. 99 is when we had the tech bubble, and of course, the market, fell out of bed from that level. But we're in this zone here around 140 in this is the dollar, and we have to take our hands off to our leader, Tom O'Brien, because 2 years ago, back in July of 2012, his program was King Dollar, and his the year probably is going to be the trade of the decade was to buy the yen versus to sell the yen, and the dollar actually shot up for quite a bit, and to see what's going to happen. So now I need to take. By the way, if you have any questions, 626 37 again 726. Wow, 877-927-6648. Looks like I have a bad connection here, and I don't this because I several times before we got this fixed. So I will just continue, talking for whatever, and we'll see what happens, and we'll just go from that level here. Now, if anybody, all I can tell you, folks, is I look at these patterns. They've been pretty good to me over these many years, but boy, when they fail, sometimes it's really a really bad thing to look at. So we'll see what's going on. I don't know if anyone can hear me or not. It looks like we're having some technical problems. I don't think it's from my end, but it possibly could be, and we'll have to just wait and see. Okay, we'll see. We'll get them fixed at the break and see if we can get it working, and we'll not worry about too much about that. Of course, when you get to be my age, talking steady maybe it's like being a type of static. Who knows? We'll have to wait and see. We have so many of these patterns that have expanded upwards, completing these T6 patterns, and they can go a lot higher. I mean, there's no question about it. One of the greatest, scams in the world is inflate something to a high price, and people will buy it all the way down. That's what Bernard Baruch said in his autobiography, and I think that is what's happening. When Japan does something like what they did here, folks, the question that I ask myself is was such a great deal? Why didn't they do this 3 years ago, 5 years ago, 7 years ago? Why didn't they do that? Did someone not tell them that it was a good thing to do? Or did they wait for us to do it first and Europe follows and somebody else is doing it? I don't know. All I know, folks, is that the gold and silver look really, really interesting here. That's all I can mention. I won't show you silver here because I think that it is also is a really nice chart that looks worthy of a trade. We've made several passes down here at $15 per $15 half level in silver. We've just completed the big ABCD from 2013. We've also completed the ABCD from 2014. They both came in at 1570. The low has been 1565 so far. We closed below that. I suppose it's going to extend down more and more, but with everybody bearish, let's try it again. With everybody is bearish, gold and silver, very, very much. And so that tells us that there's nobody left, to be a seller, in my opinion. We saw what happened in the grain markets. We had a 50-cent rally in corn when we got more corn that we'll never be able to use, yet we still had a 50% rally. We had a $1.50 rally in soybeans with a large crop coming. So these markets get oversold and they do rally. So I'm saying that at this level, what we're watching is a chance to buy something relatively cheap, and you don't have to risk very much. And that's the situation when you're trying to find really good opportunities. And that's what I think the bottom line happens to be. It doesn't look like you have to be a rocket scientist to buy something when it's cheap as opposed to buying something when it's really expensive. That's what Warren Buffett does all the time, and that's what we got going on in gold and silver now. So you buy gold right about where it is now, and you put a stop on it. And it should have a $1 rally. The last time it rallied, it was $200, and this is a bigger pattern than that one. So we could get a $300 or $400 or $500 rally. The other thing is that what in fact, if this is a major in gold, we're going to know here in the next 4 or 5 days, because if it turns around and really starts running to the upside, and say that, wow, this is probably getting ready to have one hellacious rally, and that's why we're watching it from that standpoint, is to we can still be there to try to take advantage of it if it in fact does. I know that's against the principles of the stock market, but the gold and silver to me look like they've put in a really good bottom here, and all it needs is a little push to the upside, and that would tell us that we have a really good chance. There's one stock that looks very, very interesting, and we'll cover that stock after our break here. 877-927-648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back. And what I've done is I've posted into Tiger TV today the chart that Shane Schmolian, my co-author for our new book that's coming out, that'll be out here in probably early February or March, I believe. And this is the chart that we had. We had him on, I believe, on the about the 10th or 11th of October. And these are experimental charts that he's done. He's done an incredible job with them. And this is the chart that he's looking for, and it's showing that we're looking at a November that should be turning down probably today sometime or early tomorrow would be my guess. And this would be counter to what the Bradley model says, but frankly, the work that Shane's done on this is far more sophisticated than what Donald Bradley did, because he didn't do anything to try to improve the Bradley model. And believe me, there's nothing that's 100%, and neither is the work that we're doing here, but it does show that there's a potential for some negativity come in. What this chart is showing is that once you're above the red line, which is the positive energy that they have in the cycles, you have a positive market, and once you go back below that red line, that tells you that it's negative. Now, the only way to get that negative would be to get the S&P 500 under 2,000. It's trading around 2015, 16 right now, but that's what you would need for it to do, and then that would tell you that we'd most probably be heading down into late November, early December. So we'll see. The VIX index is still holding above the old lows, but not by much. But the good part here is the volatility that we're having is going to be really superb. I've had a question about our guest coming on at the break. Ed Carlson has written several books about George Lindsay. We'll talk about that with Ed. He's a chartered member of the Market Technicians Association. He has all kinds of credentials about this. He believes that we're very close to a top also in the market, so it'll be interesting to see him as he comes on here. And you can throw tomatoes and vegetables at him instead of me, because I'm seeing the same thing, and it hasn't turned down as yet, but we'll have to wait and see. It's got a lot of things, tell me that we could be doing it. Ideally, what would happen is that we would be at a Bradley high in this area right here, but in fact that doesn't happen until the 22nd or 22nd or 23rd of November, I believe, is the next really key Bradley turn. But as you know, this thing can invert at any time, which it sometimes does. And what Shane has done, he's weighted these in a way that gives a better idea of what the market's actually doing. And so far, from the historical work that he's done, it's going to be very interesting, because if this does work out the way that he's predicted, this is going to be a really, really interesting way to map the market, because it would be a purely astrological way of looking at it, but you have to have the technicals along with it, because you don't know when it's going to turn, and it's all about risk control. It's not about how much money you make, it's about how much money you don't lose, and that's the whole thing. Perfect example of that is the yen dollar at 114. I mean, it can easily go, to 140. Remember, the yen used to be at 360 back in December of 1989. It was, I believe it was New Year's Eve that we were almost at 40,000 in the yen, and I remember that very vividly because they had a special program on CNBC. And the announcer was in front of the Imperial Palace of Japan, and he laid a $1,000 bill, which has the picture of Chase from the Chase Manhattan Bank, Salmon P. Chase, and his picture on the $1,000 bill. He laid that $1,000 bill on the ground, and he said, "Folks, this is how much money you can buy with $1,000 of real estate in Japan." That was high tick. That was it. That never went any higher than that. And I think you could put a quarter down there now and get the same value, but we'll have to wait and see if what's going to happen. I'm going to try to have Shane on early this coming week. He's really busy this week. He's unable to do it, but I tried to get him on Thursday, but he's swamped then, so there's no way that I can get him on until early next week. But I have chatted with him about it, and he is going to come back on. If you need to reach him, it's www.wolftrader.net, WOLFTRADER, wolftrader.net. You can reach him there. He'll send you some information, and it gives you some good ideas of what he's looking at. Remember, it's never a certainty. It's always a probability, and you got to keep that in mind. But you always got to be protecting yourself at all times, because if you don't, nobody else will. You have to take the responsibility for this. That's one of the things that I try to do, is when I'm wrong, I try to, let you folks know it, and we'll see what happens. But we're over some really key points right now.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our guest on the line, Ed Carlson from the Market Technicians Association. Ed, are you there?
Good morning, Larry.
How are you?
I'm just fine. And good afternoon to everybody in the eastern half of the country.
Listen, what I've done is I've posted your chart of the cycles that you're looking at, but let me give you a little introduction here. Ed has written some books about George Lindsay. He was an incredible technician going back into the late 30s and 40s. He was active all the way up until his death, which happened to be on the exact high of the stock market on August 25th of 1987. And I was fortunate enough to meet his brother, who lived in Los Angeles. During 1990, I believe I met his brother. And I never got to meet George Lindsay. My good friend Arch Crawford happens to be friends with George Lindsay, so, Arch knew him quite well. He was a rather flamboyant individual, but he certainly had some great technical stuff. Now, Ed, I'm going to turn it over to you, and I posted the chart that you sent me into the room so the folks can take a look at it. Why don't you show them, what you're looking at and get some ideas on the theory of what Lindsay worked on?
Oh, boy, you really opened it up for me.
I'm going to give you an open look here. If you're wrong, I'm going to cut you off the air really quick. No, you just show what you got, buddy.
All right. Well, unfortunately, the chart we're showing is probably the least important chart, but it's also about the only one that's understandable in a format such as this. So we're going to back up and get away from this chart for a moment, and then we'll end back here with this particular chart. It's not going to be possible to get into everything that's coming that has gone into this forecast. I guess the net of it is just like you. I'm expecting a top today. Well, I've been expecting it any time between late last week and very early this week, and today was actually my single-day point forecast for the highest probability in my mind. And then it looks like we're going to see a pullback sometime into, roughly November 10th to 12th, something like that. And remember, anytime I give it a specific date, it's just the highest probability date. There's a window of time around that, or a margin of error that we have to incorporate, and I hope that that doesn't bother anybody. But unlike yourself and Shane, I'm actually, I didn't even realize it until I tuned into your program here a few moments ago, that my final forecast for a high in the Dow matches the Bradley forecast. I'm looking for something right before or right during the U.S. Thanksgiving Day holiday week. That week is usually a real barn burner. And it looks to me like we'll move up to a slightly higher high at that time, and then that will be the end of what Lindsay called the right shoulder. Rather than dealing in very innocuous terms like bull markets and bear markets, Lindsay had a terminology which included basic advances and basic declines. And this is a much more detailed approach to the markets in that these basic advances and basic declines all fit into what he called the standard time spans. And he had very specific methods for forecasting the beginnings and endings of these things. So you don't have to wait until your market's down 20% before you realize you're in a bear market. I'll let you jump back in here with questions since it's your program, but the net
No, you're doing great. I really would like to hear more about how he broke these down into, advancing or declining, because that's, a very, very important concept for the market, because, we're a lot different than we were 50, 60 years ago, because we have the NASDAQ now, we have the IBP, we have all kinds of ETFs. So we have not just one market like the Dow, we have a conglomerate of different things that we look at. So please be as specific as you want, and we have as much time as you need, so go right ahead.
Oh, okay. Well, I'm glad you brought that up about different markets. That's actually quite important, and it might be that you and I are both right. You see, Lindsay made it very clear that his work is only to be applied to the Dow and not to a broader index. As a matter of fact, he even wrote that you could apply it to a more narrow index than the Dow, but not a broader one. And the reason for that is he's trying to avoid all the changes that go into the coming and going of different issues in the broader indexes. So it's very important that when we look at these forecasts, that we remember we're only looking at the Dow. And then you look back, in 2007, sure, the Dow, the S&P, and the NASDAQ all topped at pretty much the same date. But if you go back to the previous bull market top in 2000, the Dow topped out 3 months before the S&P and NASDAQ. So it's very important we remember we're talking about the Dow here. I guess I should say something about the chart you've got on the screen. Lindsay made mention that there is an interval of 222 days that has occurred throughout the history of the Dow Jones Industrials. Now, with Lindsay doesn't. Well, the majority of Lindsay's work has to do with intervals as opposed to cycles. These intervals can go to high to low, low to high, high to high, low to low, what have you. And with most of them, with this concept called the middle section, we know whether to expect a high or low. With this 222-day interval we've got posted on the screen, however, that's a different animal, and it isn't nearly as specific. It just tells us where we're going to see a trend, a change in trend. And if you look closely, this chart is as of last Friday, but that number there is for today. So that's one of several reasons we're looking for a high today. It doesn't tell us, beforehand a month ago we wouldn't have known to expect a top. That's a problem with this particular interval and why it's not something that's terribly important. It just adds confirming evidence to primarily Lindsay's middle section forecast. Lindsay had a very unique approach in that his forecast started with a very broad vision, and you could even say it started with a long cycle, which is roughly 20 years in length. Now, this is one time he did. His work did involve cycles going from low to low, but he broke up a long cycle. A 20-year long cycle, on average, is composed of two multiple cycles, and each multiple cycle contains between 2 and 4 basic cycles. And he's broken up the highs and lows of these basic cycles. He's labeled them A through M, A, B, C, D. Well, A, B, C, D takes you to the top of the first multiple cycle, and then down to E is the end of the first multiple cycle, and then that's roughly 7 years. And sure enough, the time between the low in 2002 and 2009 was 7 years, and that was the end of our first multiple cycle of our current long cycle, the long cycle that started in 2002. So now what we're doing is we're in the second multiple cycle, and we're trying to find the high of that second multiple cycle, which I believe is right now. We're at point H in the long cycle. The high of the second multiple cycle can be H, J, or L, H, I, J, K, L, and then down into M, or the new long cycle A. It looks like H is going to be the high because of the way Lindsay told us to forecast the high of the second multiple cycle. It's lining up for November 21st, roughly. November 21st, for those that don't know, is the Friday before Thanksgiving week, holiday week, which is usually so hot. So I could see that rally lasting into that week. But I really think Santa's got a brand new bag for us this year. The Santa Claus rally is going to be a different story, I believe.
Well, this is really good information. Now, I would like to ask if you could give us your email address, not your email address, but if you could give us your website so that folks would like to know more about your books and some of the things that you do. If you'd be so kind as to let us know, and we'll put it into Tiger TV here so that people can take a look at it and contact you if they'd like to see more information.
Well, sure, and it's right there on the screen right now. It's SeattleTechnicalAdvisors.com, and although part of it is for subscribers only, the daily and weekly research, there's enough there to keep non-subscribers busy for some time, including a blog, which if you're interested, just there's a place to sign up for the blog. There's also a Contact Us page, of course, where if you have any questions that you don't think I'd want to necessarily reserve for paying subscribers, feel free to send me an email. I'd be glad to hear from anybody.
Well, all the folks here want to know is, buy on the low and sell on the high, and if you don't, your history. They're actually a really good bunch of people because, they know, as we all do, that, we're wrong a lot, but we're right sometimes, and that's what we try to do here. But, it's very interesting at this point. I wanted to thank you for coming on, and I hope to have you on again pretty soon, especially if this happens to be the high day today, either today or tomorrow. We will put your name on the calendar and have you on just as soon as we can, especially if we're around that November 23rd time.
Yeah.
Okay?
Well, thank you, Larry.
Listen, thank you for calling us, and we will have you back as a guest sometime in late November.
All right. Thanks again.
All right, thanks a lot, Ed. Okay, that was Ed Carlson of the of the Market Technicians Association out of Seattle. He's also a CMT member, a chartered member, and he's done a lot of work on the work of George Lindsay, and that's what we were talking about. And as we put the chart into the room today, you can see that the number count there was interesting. What I found very interesting was the 222-day count because of the Gartley 222 pattern. On page 222 in Gartley's book, Gartley spent 2 full pages describing that Gartley pattern. And that's the one that I, of course, like the best of all the patterns that I see. And so we'll see if this is going to be the case or not. But the market, has basically been straight up now since October the 15th. We're very oversold no matter any way you want to take a look at it, but whether it turns down or not. And this could be one of those times when it just literally goes, bonkers to the upside. And if it does, there's nothing you can really do about it. Frankly, I thought the best trades of the week coming in was to buy gold and silver, and we're looking at gold and silver stocks. Particularly, there was a stock that Tom O'Brien follows quite a bit, and that's Gold Corp, GG, and with gold down $40 on Friday, and silver down close to $1 an ounce, Gold Corp was actually up on the day with really good volume. That was a very good. I was really surprised to see that. That takes a lot of buying, folks, to have a stock move 10% up when the rest of the metals are getting absolutely hammered. So keep an eye on GG, Gold Corp. That might be the first one to lead us up, just like what happened with the IWM when we bottomed on October the 15th. The IWM, the small cap stocks were up when the Dow was down over 200 points. And so, we'll keep that in mind. All I do know without any reservations at all is that we are looking at some really big volatile markets coming like we haven't. This what we've seen so far, folks, is nothing. We've had the biggest move we've had so far is 440 points down in the Dow in one day. I think it closed down about 360 or 370 that day, but 440 was the maximum amount from low to high, from high to low, and we're going to do at least 1.618 of that, which will take us to a new record. In other words, we'll have a record of more than 770 points down in the Dow before this, this thing really, catches hold. I know everybody's excited about what Japan did, but as I said when I started this, that this was that good a deal that they could do this all the time. Why didn't they do it 3 years ago or 5 years ago when they didn't have all the problems that they have now? I don't know how pumping $3 trillion worth of money into the thing is going to make a big difference in anything. I will tell you this, if this was 1980 and someone pumped $3 trillion worth of paper into an economy, gold would be trading at $3,600 and not at $1,170 an ounce. So those were the things that the old gold guys, the old gold bugs people had that were, always harping on was hyperinflation, like Germany had, after World War I. Anyway, we'll see if, see what happens with all of this, but it's going to be very interesting. But we are going to have increased volatility in just about everything. We had the currencies today. The euro broke down below the 125 level and has stayed below there almost all day. It rallied back after it broke down last night. It rallied back once or twice to get up to the 125 level again, but that happened to be the 61% retracement of the overnight range, and it's starting, to head back down again. And we do have this yen at this critical level of 114. Because we could easily, 142 is really not very much anymore in this because 142 would just be doubling in price from our low at 75. And we got the Dow down just a little bit, the S&P up. We'll be back after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we have a guest from New Jersey. Robert, are you there?
Hi. Hey, Larry. How you doing?
I'm good. You asked about the IWM, the small cap ETF?
Yeah. Would you short that now, or?
Yes, I would. We've had I just posted into Tiger TV. It's setting right at the 786 retracement as we're speaking right now. It's actually forming a little bit of a doji. You certainly don't have to risk more than 2 points on that ETF right now. If it gets more than 2 points from where it is right now, I would consider it a failure. But that's a really nice pattern. I mean, yeah, we made a perfect ABCD on the downside on October the 15th. We talked about that, when it was happening. And now you've had this moonshot, straight up since October 15th with virtually no correction. It's just been straight up. So it's incredibly overbought. But what I'm looking for is that you don't have to risk much at this point. You went up and made a higher high than yesterday right at the 786. And we're trading just a tick or 200 right now. So that's an ideal situation because, if it doesn't, if it goes much above where we are, two points, you're probably wrong. So this is a very, very good risk-reward ratio, in my opinion.
Okay, thanks very much.
That's all you needed to know?
When everything's... I'm sorry?
Is that all you needed to know?
Yeah, it's hard to short when everything's going up, but I guess this is the time to do it, though.
Well, the old adage, you got to buy them when they're crying and sell them when they're yelling. That's the old adage from the street. Whether that means much anymore, I don't know, but the market keeps making new highs. Every time I come on the air, it makes a new high. So we'll just see how much higher it's going to go. But listen, thank you for calling in. I want to wish you a happy holiday if I don't talk to you, but we appreciate your call and your support here at TFNN.
Yeah, you're great, and your guests are really good, too. Thanks very much.
Okay, thank you. Yes, we're going to have another guest on the show on Wednesday. I'm going to have Bill Kowal from WD Analytics that does a lot of cycle work. He's from Scottsdale, Arizona, and he's been around, quite a bit. And so we'll have him on as our guest on Wednesday. And then next week we're going to have Shane Smolian on again, the co-author of the book that we're bringing out. And I'm hopeful of having on Arch Crawford also next week with a little luck, and hopefully his schedule will work out to work out okay. So that's really what we'd like to do for next week. But Wednesday we will have another guest on to talk to us about some of these markets. And seeing other approaches is always good. And I'm not just bringing on people that are bearish folks. I'm just bringing on people that give us an idea of what their opinions are in the market. And believe me, opinions are like armpits. Everybody has one, and it usually smells. So just remember, you got to do this work yourself in order to prove that it's correct. I'd like to end the show by talking about, silver and gold. I really think they have a chance here, folks. Their percentage retracements of the last bear markets from 2011 was exactly to where we are right now. And, we're very, very close to these spots that I think are, incredibly important. And it's just a low risk here to be buying gold and silver. And even if it's just a small rally, it could be substantial, whether it's going to be that or not. Someone's asked a question about natural gas. We had a really strong move today to the upside coming off that Gartley pattern we had last Thursday that we talked about on the commodity show. We've now hit that level. And, we're up around 4 again, which was really good. It's had a tremendous move from 3.5 to a little over 4 in the natural gas. But we'll talk more about that on the commodity show when we come in on Thursday to get to do that. But I think the focus is if you have any inclination to buy gold and silver stock, now's the time to do it because the risk here is very small. Gold going below 1140 would tell us that we're wrong. Silver going below $15 an ounce would certainly tell us that we're wrong. So that's it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.